US Services PMI drops to 50.1 in July 2025. Tariff impact on trade revealed. The U.S. services sector is sending mixed signals in July 2025 with a PMI reading of 50.1, just shy of the 51.5 forecast. While this barely stays above the 50 threshold for expansion, the data reveals a troubling slowdown in key areas. But here's where it gets controversial. The sharp drop in imports and exports, driven by tariffs, is sparking debates about whether this is a temporary hiccup or a deeper structural shift. Let's break it down. The services PMI dipped 0.7 points to 50.1, with 7 of 10 components declining. Business activity fell 1.6 points to 52.6, and new orders dropped 1.0 to 50.3. Employment, a critical indicator, plummeted 0.8 to 46.4, signaling a contraction in hiring. Supplier deliveries improved slightly, but inventories and inventory sentiment both slid, hinting at cautious stockpiling. Prices surged 2.4 to 69.9, the highest in the data set, while backlogs of orders grew. The most eye-catching shifts. Imports and exports both crossed into contractionary territory. Exports tumbled 3.2 points to 47.9, and imports collapsed 5.8 points to 45.9. Analysts are pointing to tariffs as the likely culprit. But is this slowdown a temporary blip or a sign of deeper structural shifts? The survey comments from industries tell a more nuanced story. Take agriculture. Farmers are grappling with higher costs for imported feed ingredients, forcing them to delay projects or absorb risks. Construction firms report trade uncertainty causing project cancellations, while mining companies admit they've already maxed out pre-tariff stockpiling. Even healthcare providers are postponing non-essential projects to offset rising equipment costs. Yet some sectors remain optimistic. Retailers note a post-Independence Day sales rebound, and real estate professionals argue that tariff talk has been more bluster than action. And this is the part most people miss: the human impact behind the numbers. A food service company mentions delayed fiscal planning, while educators cite summer lulls. Finance and insurance firms report steady activity, but transportation and warehousing see price hikes across the board. The word tariff appears 9 times in these comments, proof that trade policies are reshaping business decisions, even if the full effects are still unfolding. So what's next? Will the U.S. and its trading partners recalibrate? Or will these trends harden into a new normal? We'd love to hear your take. Do you think the tariff-driven slowdown is overblown? Or does it signal a turning point for global trade? Share your thoughts below. For deeper analysis, visit investinglive.com, formerly forexlive.com, to explore how these dynamics might shape the rest of 2025.